Happy Friday. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me is my co-host, CoinDesk managing editor of Global Capital Markets, Lawrence Luton. Emily Parker is off today. So then there were two, Lawrence. Good morning.
Yeah, I'm outnumbered still. So, yeah, at least intellectually, definitely.
Oh, love it. Always very generous. All right, checking in on Bitcoin. The CoinDesk Bitcoin price XVX index is currently at $42,152. Bitcoin is slightly down about 4% over the past 24 hours. The CoinDesk Ether price ETX index is at 3207. ETH also declining about 4.8%. The DFX, CoinDesk's DeFi index, is at 419 points, taking a bit of a step back at 3.9%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. All right, so looking at the markets right now, a bit of a step back. Lawrence, what would you read into that, if anything?
I think we got some bearish sentiment coming up. We're seeing negative funding rates going on in the markets, which means that people aren't borrowing money to take on these crazy long positions. So, I think like going the next few days.
Perpetual's open interest is up, is it not?
I mean, like a little bit, scooch. What's that? Like
you've also got,
a little bit.
You've got a scoop on Tether too, right?
It's actually Helene Braun, our new stablecoin reporter. She put out this thing on Tether freezing a big chunk of several million, if not more. Let's just say, Tether has been freezing every so often. They freeze certain accounts, they blacklist them that they're not allowed to trade for whatever reason, and they apparently they caught one yesterday. So the guys at Tether, are keeping track of people who shouldn't be moving money around, and they're clamping down apparently.
Interesting. In other news, crypto exchange FTX has established a $2 billion fund to invest in crypto startups. That's according to a Wall Street Journal report. And that makes the FTX Ventures Fund one of the largest in the industry. Investments could be as low as $100,000 and as high as hundreds of millions of dollars. And we know in October, FTX just raised about $420 million and was valued at $25 billion. Amy Wu, who heads up this fund, told the Journal that she's particularly interested in crypto gaming companies as well as insurance and security products. So interesting to see those developments. Let's check.
How much do you think is going to go into Solana stuff? I don't know.
One can only guess.
Stake in that.
Let's check out
He's got a big
CoinDesk
stake
Spotlight.
in that.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Cash transfer company MoneyGram International has made a strategic minority investment in cryptocurrency cash exchange Coinme, giving MoneyGram a 4% ownership stake. Last May, MoneyGram said it would allow customers to buy and sell Bitcoin for cash at 12,000 U.S. retail locations through a partnership with Coinme. Joining us now to discuss is Alexander Holmes, CEO of MoneyGram, and Neil Bergquist, CEO of Coinme. Hello, Alexander and Neil. Good morning. So, Alexander, MoneyGram has a strategic partnership with Coinme. What made you double down and go from a partnership to having an ownership stake now in Coinme?
Yeah, well, thank you for having me this morning, and it's good to see you again. First and foremost, it's been a great several months working with Neil and his team. I think what they've tried to do to really come at the crypto market a little bit differently from everybody else, really taking it more mainstream for as many consumers as possible by pushing the initiative through initially with Coinstar and then partnering with MoneyGram. To me, really aligns just completely along with our strategy in terms of how we help consumers around the world access financial services more dynamically. And so for us, the partnership was great. I love Neil and his team. They were doing an amazing job. And to be able to invest in his company in early stage and really think about what that can mean for us from a longer-term partnership means a lot to us. We're excited about that, and we're certainly proud to be a part of his organization and really along for the ride.
So Neil, what did you give up to MoneyGram? What did you? It was 4%, but what else are they? What are they going to get for it?
Oh, it's a win-win. So MoneyGram spent the last 80 years building out global infrastructure for moving money, and building on our partnership, we're able to further leverage that infrastructure for interoperability with crypto. And the investment enables us to continue what we've been doing, but go faster and look at additional markets as well. So it's a really exciting time.
So we have a map up. Go ahead, Lawrence.
I love this map. So I see it.
Let's check out the map. All right. So we have a map of locations of Coinstar, which belongs to Coinme, MoneyGram, across the United States. And I'm wondering, what's the strategy of where you're placing the kiosks, and where are you planning to scale? Any plans to go outside the U.S.?
So placing kiosks, I think 7 years ago was much more precise. Now it's wherever there's a location that can be crypto enabled, we'll crypto enable it. We now have a location located within 5 miles for the majority of the American population. We're close to being on par with the number of ATMs that Bank of America or JP Morgan Chase have. We now have crypto locations for cash to crypto, crypto to cash. So we've really hit that scale in the United States, which is really exciting. In terms of expansion, MoneyGram has a lot of customers and volumes in Latin America in terms of cross-border remittances in the EU. And really, with MoneyGram Online, there's almost about 40 countries that they service. So they definitely set the bar high, and that is exciting for us to give us a clear roadmap as we look at expanding outside the United States.
And I wonder, who do you see buying Bitcoin? Is it folks going into CVS and, buying some shampoo and then buying up some Bitcoin? Like, what are they using it for? Are they using it for payments or remittances?
Yeah, they go to CVS and get their Xanax prescription after look at the inflation rate and then buy some Bitcoin. Has been the flow recently. There's a lot of people that buy Bitcoin for different reasons. There's people that buy it as a store of value and speculate on the price. There's people that use it as a hedge against inflation. There's people that are buying it and using it as a medium of exchange or paying for goods and services. So we really do service a lot of different personas. One of the key advantages is instant liquidity. So if you're buying with cash, you get instant access to your Bitcoin. So it's yours. You can do what you want with it. Whereas if you buy on online exchanges with a bank transfer, there can be a lockup for a period of time because of the risk of fraud and chargeback. So, you have people that have, exchange accounts using the service because it's a great way to get instant custody as well.
Well, look, if MoneyGram's putting money with you guys, it sounds like there's significant amount of volume. But how much volume are we talking here? I mean, what are we looking at, and in terms of the relationship with MoneyGram itself?
Yeah, I'd say overall the volumes aren't where they could be. We have been growing at about 35% month over month, which is great since launching the initial partnership in May. So there's definitely a lot more upside. I think we're still in the process of even just building market awareness and making the consumers aware that this service even exists.
Alexander, I'm wondering, what was the demand for this on MoneyGram's side, and who do you see buying Bitcoin?
Yeah, it's a great question, and there's a lot going on in the market, and it's pretty dynamic. I think Neil hit on a lot of the key points around different consumer demographics. But certainly there's a strong correlation between remittance users and interest and desire to be more active in the crypto space. I think about 51% of consumers that are currently part of the remittance process are interested in participating further in crypto, which is great. I think something in the neighborhood of $45 billion went from the U.S. to Mexico last year, and the estimates are about $2 billion has now gone in Bitcoin. When those consumers are asked, are you replacing your remittance with a Bitcoin transaction? The answer is no. Actually, they're supplementing and sending the Bitcoin in an attempt to increase savings capabilities and diversify their portfolios. And in some respects, many of our consumers feel left out of the traditional financial markets, right? Getting bank accounts, getting brokerage accounts can be complicated. It's costly. And so, to be able to bring that access more mainstream, to give consumers the ability to load and unload through cash, which is something that they're very used to doing, is pretty remarkable and a really unique position to be in. I think when we last spoke on the show, we were talking about our integration with Stellar, and that's really about creating more ubiquity, really creating that interoperability between fiat and crypto. And I think that's a really strong position that MoneyGram is in right now, where we have that actual ability to bridge, this sort of digital asset world back to fiat. And I think that that's an important aspect of many consumers. I think globally, the statistics would still say that, 85% or so of people have heard of crypto or Bitcoin, but yet, only about 16% or so actively participate in the markets. And so how do you bridge that gap? How do you make it more accessible? How do you change that? I think MoneyGram has a huge role to play, though, for us, being able to offer that service side by side to create more interoperability is exciting for us. And I think, what Neil is doing is certainly pioneering and innovative in that sense, right? It's the first real exchange that's actually trying to push that cash agenda more down to the people. So I think it's great, and for us, as Neil said, to be able to expand that to new markets, to take that overseas and create that interoperability is going to be a lot of fun, and we're definitely looking forward to doing that.
So one of the places that of course is drawing a lot of attention outside the United States, of course, is El Salvador. When we talk about remittances, and we talk about the use of cryptocurrencies. What's going on with your experience there in El Salvador? I understand there's some issues there, but what also is your view of what's going on over the past several months with the country adopting one particular cryptocurrency, Bitcoin, as a form of legal tender? Does that change how you guys deal with El Salvador at all, or your outlook? And do you think that you could expect that elsewhere, or maybe perhaps more favorable approaches from other countries? And if so, which ones?
Yeah, I don't live in El Salvador, right? So it's hard for me to sort of relay what's exactly happening, on the ground. Obviously, there's a lot of news and information coming out of the country that would suggest that, so far the experiment with Bitcoin and trying to bring it mainstream has a lot of bumps and challenges with it. I would also, say that, it's not, yet mainstream in the markets. I think it's, fairly exciting around, what they are trying to do, yet obviously with bumps and bruises, and, there's a long way to go in terms of, creating the ability to really use, Bitcoin more directly in the traditional fiat world and in the traditional, retail markets. That being said, I think what's so compelling about the opportunity is to really think differently about what fiat currency really is, and what's really the difference between fiat and crypto in that sense. And so, for us, again, we move money all over the world in 120 plus currencies, and to add crypto to that agenda really isn't that complicated, and in fact, I think is pretty unique. And so, I start to think about it in the sense of, consumers want to send money back to El Salvador. They send, typically U.S. dollars. They're paid out in U.S. dollars, and it's a very inexpensive transaction for them. So, our volumes have been very strong to El Salvador and continue to be so. But yet, as consumers, want to look toward alternative forms of investment, they want to look toward Bitcoin and other currencies. I think it's exciting, opportunity to say, hey, why not, buy that crypto here and send it home rather than sending money and then trying to buy crypto inside. So I think, that again, that interoperability and that opportunity to think very differently about what value and assets are really about, what crypto is really about, and what fiat is about, and how to create that balance, I think is interesting. So, as we look around the world, clearly more and more consumers are coming into, cryptocurrencies. The interest in it continues to go up. There's more and more opportunities to actively think about crypto from an application perspective. So I think it's important that we continue to be innovative, think about, how we can evolve the MoneyGram service and really, bring, cryptocurrencies to the consumers around the world as they need it. And then the ability to exchange that back into fiat real time. And that's important. I think Neil touched on that earlier, right? The ability to go to the Coinbase, it's slow. It can be clunky when you're trying to convert back to fiat. You go to Coinme, you walk to CVS, you can get your cash instantly. So it's very different.
Just one last question. How does the infrastructure bill recently passed in Congress affect your operations? Do you have to know your customer information at the kiosk in terms of privacy? What kind of customer info do you have to capture, if any?
Yeah, great question. I'll start, and then Neil can talk about it on his end. But for us, we've been leading in KYC collection processes. We collect ID at the point of sale, name, address, date of birth, etc. So we feel very good about our KYC processes, and then we're actually doubling that with what Neil's already doing in terms of registration on the Coinme app. So it's pretty exciting how we're kind of balancing the two. So Neil, if you want to pick up on your end.
Yeah, very similar. So we obviously have an AML program, and as part of that, we collect document verification, selfie, do sanction screening, and a myriad of other things. So we already do KYC on all of our customers at $1. The infrastructure bill is more on the tax reporting, which involves more social security numbers for liquidations. So that'll be something that we'll need to implement and be in compliance with.
All right. Well, Neil, Alexander, thank you very much for joining us, and looking forward to seeing your new partnership flourish. That was Alexander Holmes, CEO of MoneyGram, and Coinme CEO Neil Bergquist. Coming up, our next guest managed to exit his firm's Bitcoin position at the peak. We'll dive further with our crypto market update.
Hi, I'm Christine Lee.
Zach Seward.
I'm Michael Casey.
I'm Christy Harkin.
I'm Isaiah Jackson.
I'm Serena Lynn.
Hey, this is Will Foxley.
I'm Teresa Santos.
Hi, I'm Lawrence Lewitton.
Hi, I'm Dorian Wayne.
I'm Nicholas Day.
Hi, I'm Kevin Worth.
My name is Naomi Brockwell.
I'm Jordan Muthra.
Hi, I'm Galen Moore.
Hi, I'm Brad Count.
I'm Pete Paschal.
Hi, I'm Jen Sanasi. You're watching.
And you are watching.
And you're watching CoinDesk TV.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Here's our live look at Bitcoin. The CoinDesk Bitcoin price XVX index is currently at $42,330. Bitcoin taking a step back about 3.9% over the past 24 hours. The CoinDesk Ether price ETX index is at 32.27, also retreating about 4.2%. And the DFX CoinDesk DeFi index is at 419 points, declining almost 4% over the past 24 hours. Joining us now to discuss the crypto markets is Brad Roth, founder and CIO at portfolio risk tech firm Thor Financial Technologies. Welcome to the show, Brad. So Thor uses technical signals to trade in and out of crypto on behalf of your investors. You exited into a 100% cash position when Bitcoin was at $62,000 in November. When are you re-entering the market? When is it a good time to buy?
Well, Christine, Lawrence, good morning. Thanks for having me on. So yeah, we did exit about 62,000, and we don't really have a re-entry point at this point. We don't have a price point. We react to what the market is going to do and what the market tells us. So therefore, we don't have a clear entry at this point. I think if we get a little bit more upside in Bitcoin, we will probably re-enter somewhere around 48,000, but we still need to let this market kind of bleed out a little bit more, we think, in the short term.
What was the signal that gave you a sense that this was a top? And did you tell your clients? Did you tell people like, hey, you know what, we're out now? Or is this sort of, like, do we have any evidence you guys really did this, so to speak?
Yeah,
or
of course.
Just,
of course.
Yeah.
Yeah. So we're an SMA provider. We partner with Eaglebrook Advisors. We have clients that are invested in our SMA products. And the signal really is more of an engineering and a scientific one. What we try to do at Thor is we try to eliminate a lot of the noise that the market kind of inhibits in Bitcoin. And if we can bring some of that noise out and really look at full cycle, we can get a little bit clearer signals than using, just normal technical analysis or looking at all the day-to-day volatile moves that occur in Bitcoin and even Ethereum.
So, and you're saying now it's not telling you to get back in, but what do you think would be the driver that would say, okay, you know what, 47, 48 would be it? Like, what kind of driver do you think? What the catalyst would be that would make that signal happen?
Yeah, for us, it's price and kind of the velocity of price, how we got to price and more of a momentum-based process, right? So we're really focused heavily on that. What we're looking at in the short term is really a lot of the different fundamental macro factors that are occurring in broad markets. I think what Bitcoin needs to see is broad markets not sell off. We think that the S&P 500 has been held up significantly by the mega caps, and we're starting to see a little bit of weakness in that sector. And so I think the only thing that could hurt Bitcoin and send it lower at this point is continued weakness in broader markets. But if we see that settle down and an uptick in price, and as well as kind of that momentum of price, that's where we'll start to re-enter our position.
So we're definitely seeing a lot of volatility out there. How are you instructing advisors to weather these ups and downs?
Yeah, so great question. And that's the whole reason why we started this SMA. I mean, the whole backdrop of our firm, whether it's in equities, ETFs, or in crypto, is to manage downside volatility. That's the whole reason why we started the firm. And so when we're talking with financial advisors, when we're trying to onboard them and talking about portfolio implementation using Bitcoin, right, we're going out and talking to RIAs and financial advisors every day and say, look, we think 60-40 portfolio construction is dead. We think you need to allocate 3 to 6% of your clients' assets into Bitcoin or other crypto assets. And what we're really trying to tell them is, look, Bitcoin is a very volatile asset, but if we can make that ride just a little bit more peaceful, if we can bring those standard deviations down, if we can bring down your duration of drawdown and lower max drawdown, we want your clients to be excited and kind of stay with this 3 to 6% allocation. The last thing we want to do is really introduce them to the space, have financial advisors educate their clients, and then all of a sudden they invest in it and it goes down 50 or 60%, and they say, I never want to be in that space again, right? We want to keep them engaged, and this is kind of our way of doing it.
So what kind of tools are you using to lower volatility? Are you going into the options market and buying puts and calls, or selling puts and calls, or are you going into the futures markets? What are you doing to lower that volatility?
Yeah, so we're invested directly in spot. We don't use any derivatives. We don't use any leverage. Really, at this point, our process is quite simple. We either see bullish momentum and see bullish trend in Bitcoin, or we see negative and bearish trend. And if we have that negative or bearish trend, all we're really doing is raising fiat, right? We're raising US dollars at this point. So all of our clients' accounts right now are just sitting in cash waiting. We do have other alternatives and strategies and SMAs that we're building that might utilize some stable coins, might utilize some other means. But as of now, the strategy is really binary in terms of we're either long Bitcoin 100% or long Ethereum 100%, or we're sitting in cash just waiting for the ride to kind of settle down.
And you mentioned that you're waiting to re-enter Bitcoin again. So I wonder what kind of headwinds you feel are in the way, are headed for Bitcoin, and whether you could see it going a leg lower.
Yeah, well, to us, the headwinds from a macro perspective are quite obvious. We think that the Federal Reserve has to raise interest rates. We think 3 to 4 rate hikes in 2022 are almost inevitable. We have an historic divergence between what CPI is and what the effective Fed fund rate is. We've never had a 7% spread. In fact, we've always had the Fed funds rate be hovering generally above inflation. And so we think that the headwinds are obvious, that we have rate hikes coming. We have the balance sheet that is going to end up starting to shrink, which a lot of this equity, as well as Bitcoin performance, is done very, very well off the Fed pumping dollars into the system. And so we think as the Fed tightens, those are the clear and obvious headwinds heading into 2022, specifically for Bitcoin and specifically for broad equity markets in general.
So looking at, you said you don't just do Bitcoin, but also ETH. Do you do anything else besides the two majors? I mean, are there any other alts that you're looking at right now?
Yeah, great question. We are currently working on that. One of the things that our process relies heavily on is data. We're a data analytics company first. We just choose to apply our analytics to equity markets and to crypto markets. And so we just need to see more data in a lot of these DeFi and other cryptos, right? And we're building that data right now. So we have plans to start working on other SMA products that include a variety of different coins, more of a diversified portfolio, if you will, of coins. But as of right now, our process is strictly on what we have the most data on and reliable data on. But we can see in the future starting to work on projects that include other, alternative crypto assets.
All right, Brad, thank you so much for weighing in on the crypto markets. Appreciate your insights. That was Thor Financial Technologies CIO, Brad Roth. Coming up, checking in with CoinDesk's Nick Day and Ripple's latest small win with the SEC. That's next. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. Happy Friday. So the SEC must surrender an email with a draft of former Director William Hinman's speech on whether ETH is a security to Ripple. And you wrote an article on this story. So what's going on, Nick?
Good morning. Yeah. So last night, Magistrate Judge Sarah Netburn of the Southern District of New York ruled that the SEC has to turn over certain documents, including, as you said, a email of a draft of former Director of Corporation Finance William Hinman's speech, in which he said that Ether is not a security. This is it's a continuation of the procedural back and forth that we've seen over the past year. Literally, it's been more than 12 months at this point since this case began, and throughout this, what's really been happening so far is the two parties are just trying to kind of define the scope of the discovery process. So try to figure out, who has access to what. In last night's ruling, Judge Netburn said that, anything that, constitutes internal deliberations or, pre-decisional thoughts does not need to be turned over. It's protected by, privilege. The SEC can hold on to that. Anything that shows viewpoints of the authors rather than just, straight objective note-taking. So the SEC does have to turn over this email as well as certain communications between themselves and, Ripple in particular. It does not have to turn over, documents pertaining to, interagency communications. It does not have to turn over documents with other third parties. Basically anything that might kind of hint at how the SEC approached the enforcement action. So in addition to the email, that they do have to turn over, there's a separate email from the office of the counsel of the Director of Corp Fin that does not have to be turned over because it is more subjective than objective.
So let's step back a second here, and what's Ripple hoping to get out of this? Because the Hinman speech was, from my recollection, this was a while ago, was that it was kind of pivotal because it said, "Hey, you know what? This is not a security," and it sort of led to a little bit more comfort in people looking at ETH as an investment vehicle because they didn't have the worry of the SEC on top of it. So what is Ripple hoping to get out of having these notes, having this information out there?
Right. Yeah, you're exactly right. The Hinman speech ultimately, kind of can be traced to, we have Ether futures now. Ether's been, cited as a commodity by members of the CFTC. So, that speech was certainly pivotal, although it's worth noting that at the beginning of his speech, Hinman said that those were his own views and not the views of the SEC itself. And I mean, that's just kind of how the SEC operates. Everything is the views of the person saying them. So still pivotal, though. And I think what Ripple's looking for here is proof that either XRP and Ether are being treated separately and distinctly by the SEC, despite similarities that they want to highlight, or that the SEC's Ether stance, such as it is, is for whatever reason or however inaccurate. If you compare it to XRP status and the way the SEC has approached it. So, they're really just trying to highlight either what they view as kind of a unreasonable distinction between the two different assets, or the similarities and why they should be treated the same, i.e., not securities.
So, do we know, behind the scenes, and I guess this is we're still waiting to have come out, whether or not, I don't want to say it was personal, but whether or not this was an incredible difference in just viewpoints within the SEC that ultimately led to this kind of to this lawsuit. Do we have any sense yet as to how much personal opinions, not just Hinman's, but other commissioners had in making this happen?
So, going off of my recollection of the last 2 or 3 years, really, 3 years. So the way Hinman approached Ether in his speech, he said that in his view, Ether at that moment in time was not a security because of what he claimed. What he said was the amount of decentralization, the number of parties involved in not only using Ether, but in running nodes and distributing Ether. So talking about the miners and talking about the different parties involved in looking at the code and such. In his, in that same speech, he kind of implied that Ether might have been a security at launch, but that it had become, quote, sufficiently decentralized in the couple of years since. The SEC's case against XRP and Ripple claims that, Ripple sold and continues to sell XRP as a centralized party, and it's doing so for the purposes of, raising not only funds for itself, but also promising that XRP's price will rise because of work that Ripple does or that Ripple employees do. So, I can't speak to whether or not this is a personal thing or anything like that, but at least as far as the two different assets go, the SEC has or SEC officials have drawn kind of these distinctions in explaining why they believe that Ripple is selling XRP as an unregistered security versus why back in 2018. An SEC official said, yeah, okay, Ether is not a security, in my view.
Yeah, Nick, just stepping back, and we have to wrap, so we've got to make it quick, but there's been a lot of talk about how the lack of regulatory clarity in the crypto space. We spoke to a Jones Day lawyer yesterday who just said, crypto firms have to find regulation through litigation these days. Do you think this is an example of that?
Yeah, I mean, regulation through enforcement has been kind of, what we've heard for years now out of the, attorneys who work with the SEC. And, put another way, you could say that that's just following the law or you're going to get sued. But the concern that attorneys have had is that, especially with digital assets, there are certain things that you can do with a digital asset that don't really map well onto existing securities law. And so what they're hoping is that the SEC will at some point go from just the enforcement actions to issuing, perhaps more binding guidance that attorneys can then point to and say, all right, if you do, this, and this, you're fine. You're not going to get sued. Good to go.
All right, Nick. Thank you for monitoring this case. Interesting stuff. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. All right, let's take a look at crypto Twitter for a tweet of the day. This one was from the general manager for hardware at Block, formerly Square, Thomas Templeton, tweeting, in October, we announced that we're considering building a Bitcoin mining system out in the open and alongside the community, and we've decided we're doing it. We thought we'd share some more details on how our initial discussions are going and where we're headed next. And there's a cool tweet thread that follows. Block's hardware team is going all in and building out a core engineering team. So if you know something about systems, ASICs, and software design, Block is hiring. All right, that's it for First Mover. Thank you, Lawrence Luton. Always a pleasure. I'm your host, Christine Lee. We're off on Monday for Martin Luther King Day. On Tuesday, one of the world's top crypto investors, Katie Hahn, will join us on First Mover. Meantime, check out The Hash at noon Eastern and All About Bitcoin at 3 o'clock. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast with Mega Chada to see what's happening in the Asia crypto markets.
Welcome to the Daily Forecast, January 14th, 2022. I'm Megha Chadha of Forecast News, covering all things blockchain. Marketplace LooksRare has taken the NFT world by storm, seeing explosive trading volumes since its launch at the beginning of this week. We'll take a look at that story and a whole lot more coming up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories out of Asia today. First up, China's blockchain-based services network, a public-private initiative set up to spur mass adoption of blockchain technology, is rolling out infrastructure to support NFTs. It will allow businesses and individuals to create user portals or apps for NFTs. However, it will have no link to a cryptocurrency, with payments only allowed in Chinese yuan. Red Date Technology, with China tapped to manage BSN, told Forecast News it will be up to business owners to conduct due diligence when creating applications using the infrastructure to avoid any legal concerns. While NFTs are not banned in China, big names including Tencent and Alibaba have rebranded them as digital collectibles after criticism over hype and speculation from state media. Meanwhile, in an interview with CoinDesk, the tiny Pacific island nation Palau's president announced plans to issue a stablecoin to support a blockchain-powered overhaul of its economy. With a population of under 20,000 people, Palau's economy has been battered by the pandemic as it relies heavily on tourism. The move is part of a broader strategy allowing anyone to apply for a digital residency program that provides NFTs of personal ID cards, which grant access to state-backed benefits. The country's government is also establishing a crypto exchange and digital registry as well as digital wallets for its citizens. You can find those stories and lots more at focus.news. Now, the world of NFTs is on fire, and the launch of LooksRare has added more fuel to those flames, with the marketplace racking up over $1 billion in sales volume since its launch on Monday. Forecast News' Lachlan Keller has more.
Despite being online for less than a week, according to data from DappRadar, LooksRare's trading volume is more than 40% higher than market giant OpenSea has seen over the last 7 days. One expert told Forecast News that LooksRare's tokenomic model, which includes allowing users to stake the native Looks token for rewards, has been key to that success.
It was a critique of some of the community was that they really wanted to have an OpenSea token. And they were really looking forward to that. And when that didn't happen, I see a lot of the community supported LooksRare and their token because of that as well.
However, Kalpu says that some sales may not have been totally authentic, as one incentive offered Looks tokens as rewards for volume traded, which encouraged some people to try buying and selling their own NFTs. As for OpenSea, while it has a huge market share for the moment, he sees more competition ahead.
I think with the right amount of features, the right amount of incentivization structures, incentives, a marketplace that puts all of those things together can certainly challenge OpenSea.
Meanwhile, Kalpu says another trend he's seeing in the space is the development of more niche marketplaces set up by communities to focus on single projects. For Forecast News, I'm Lachlan Keller.
Energy prices are on the rise around the globe, causing mass protests and even government resignations, as seen in Kazakhstan. While insatiable consumption and policy drawbacks are among the many reasons for the fuel crisis we are currently witnessing, some, however, are pointing fingers at crypto mining. In fact, it's been banned in many countries as it's seen as being energy intensive. So is there a way of disintermediating energy consumption from crypto assets? Let's find out from Adrian Brink of Anoma. Adrian, thanks so much for joining in.
Glad to be back.
Cryptocurrencies are often seen as energy guzzlers. A news report in not so distant past said Bitcoin mining consumes 7 times the energy used by Google globally. Is that a fair comparison?
I don't think it's a fair comparison. Bitcoin fundamentally offers something very, very different and very unique, that something like that is not comparable to what Google offers. It's not just a service that people can consume. One way to really think about something like Bitcoin is that yes, it consumes energy, but it delivers a very valuable, never seen before kind of service. There are a couple of ways you can think of what Bitcoin actually offers. One, it's uncensorship resistant money, so it's more similar to something like gold. And if you compare Bitcoin mining to the cost that goes into mining gold, Bitcoin is by far preferable here. And the other way to look at it from less a monetary perspective, but think of it like a global unbiasable clock. It is running, you can checkpoint at any point into a block or reference a Bitcoin block, and it's certain that the thing you've referenced has happened at that point in time. This is something that has never existed before. And so I think it's a matter of trade-offs.
Adrian, so as we move towards becoming more energy conscious, what role do you see proof of stake protocol playing versus proof of work?
Proof of work has its place. It provides a very useful utility. And I think it's going to exist for a long time. But I think there won't be hundreds of millions or hundreds of thousands of proof of work chains. Because for obvious reasons, modern financial applications are much better served by being built as a proof of stake system, because A, it's much more energy efficient, as in the energy consumption of a proof of stake chain is negligible, and B, proof of stake gives you a lot more flexibility in terms of application speed, throughput, the complexity of the kind of application or state machine that you can deploy on these systems. So I think we will probably see 1, maybe 2 or 3 proof of work chains persisting that are more similar to why we mine traditional resources. But then the vast majority of the actual financial infrastructure that we're building here in this industry is going to be proof of stake chains.
And lastly, is there a greener way of engaging in the world of digital currencies by setting off your carbon footprint?
Yeah, I think it's important to one, the goal isn't carbon neutrality. The goal has to be carbon negative. And as such, I would say that it's not really important to offset the cost of the underlying blockchain, right? If you're on proof of stake blockchain, offsetting the carbon cost of that transaction is negligible. What proof of stake though allows us, and what we're also building with Anoma, is for people to opt in with every transaction, they actually become carbon negative. That people can automatically, when they send a transaction, that transaction automatically under the hood purchases negative carbon or carbon credits, which are then burned. And I think really this is the goal, that we're starting to direct more money to burn carbon credits or to incentivize the removal of CO2 from the atmosphere rather than worrying of just becoming carbon neutral, because honestly, that's not going to be enough.
Well, it's not just about offsetting our carbon footprint, but reducing it. And crypto can help us do that. Adrian, thanks so much for the insight. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Megha Chada. Until next time.